Welcome everyone to another crypto market update. We changed the name a little bit. We're calling it Financial Market Update because we switched it from mainly talking about just cryptocurrencies and the different alts into more of a economic, multi-asset analysis where we're looking at things like gold and silver and oil, looking at commodities, and then also even just looking at the gold and silver ratio, 1/100, very significant level, and then we look at two time frames, the smaller term time frame and then the larger term time frame on the S&P 500, and then we go over the US dollar currency index. It's seen some massive volatility, and I think that it is going to be something that we're wanting to be looking at for a potential sign of weakness. And if that is the case, obviously, the dollar weakening is a sign of strength for precious metals and hopefully Bitcoin as well. So we'll be going over a lot of different economic charts, kind of building a story for the entire breakdown. And we will also be looking at the balance sheet of the Fed and seeing how much money they are printing and seeing the increase and the quantitative easings that they're implementing and all that stuff. So we'll try to keep everyone updated. I'm very, I can't say excited, but I'm very interested in what is currently happening with the global economics and with so much going on in terms of government shutdowns and what this means, and a lot of stuff is going to happen here in the near future, and this is kind of the beginning of what I think is going to be a long, painful fall of some massive deflation and difficult times for sure. But I think in the end, the investors will come and see the understanding that the US dollar will be basically printed into oblivion. And we've got to do something about it. And investors will be parking their cash in places that have a fixed supply or have a supply that is not controlled by people that are Keynesians and have Keynesian economic theories. So in that said, we will start off with Bitcoin because that is the main... Actually, I think we will start off with the different assets here because I think we'll go and start off with gold, silver, and then go into the cryptocurrency market. So I think that's the start off we're going to have with the charts. Let me just take a quick look to see if we have any news that is really relevant here really quickly. What we're looking at is our Discord, and we have a bunch of news topics here that is provided by our automatic bot that posts really any relevant news regarding cryptocurrencies, and it has a couple of news or blogs or has a couple of sites, reputable sites that it pulls from. Bitcoin Cash meetups, go virtual, not super important. BitMEX explains why. So BitMEX, they had an issue where they basically had to shut down because Bitcoin's price could have hit zero, and that's basically everyone's account getting liquidated almost. So, they halted trading in a very important time, which led a lot of traders and investors to, I'm sure, not get filled when they should have, or had some sort of issue with liquidation. So they're gonna have some sort of issue legally, and it says that they're now paying out $200,000 worth of either currency or US dollar, or cryptocurrency or US dollar, to the individuals who were affected. It seems like Binance and Indian Exchange announces 50 million blockchain for India fund. US takes regulatory steps for blockchain technology adoption. Let's just quickly see what it says here. I don't think there's anything too important. If you do want to read more, there is always links here within our Discord that you can read it. Just says that, just reading it here. Nothing really interesting that comes out of it. Yeah, I think we're just going to skip this one here. But, nothing really that sticks out. I do think that the main topics of the kind of day is just the amount of rate cuts around the world that we're seeing from central banks. And we'll talk about that a little bit later in the video. But I think the first thing we're going to go over is the economic side of things here. First, looking at gold. We did draw our descending trend line here. Actually, let's take a step back on the 4-hour. We had a massive dump to the downside. We did break our 1550-ish $100 level of support. Very, very key level. And then looking on the daily, we have this trend line. So let's get our snip and just talk about what we're currently seeing within the markets and what we could potentially see in the future here. So we got a strong move to the upside, breaking previous resistance, creating a nice new level of support. We see a very strong level of resistance at around 1680. We fell down below this previous level of resistance and support at around 1550, and now we're going to be using that as a nice level of resistance. We have some higher lows here, so right now, in my view, the structure of the market is going to be looking like somewhat of an ascending triangle pattern, where we're seeing higher lows, where we see wicks to the downside, but the candle bodies are closing right at our ascending support level. But we do also have to keep in mind that this 1550 level of previous resistance and support is going to be the market structure resistance that we're probably going to be holding at. If we do see the price go above this zone, there's a probability that we will see this area again, if not the mid-range zone. So we could be looking a little bit more bullish on Bitcoin here. But in my personal view on the daily, that is the overall structure that I'm seeing. And it's just a matter of if we're going to break to the upside, well, then we're going to be looking for that higher high and then the higher low. And then once we see the validation of buyers within the market on the higher low, once we see injections of buy pressure and, the drill double bottoms, we're looking for long wicks, bullish engulfing candles, no supply, all this. Once we see that, then we can look for a possible entry here, as well as looking at BTC. At this point, they're pretty well correlated. So if we're looking at gold and silver, we can kind of safely assume that BTC is going to follow suit if we're looking at larger time frames on the 4-hour, daily, and maybe even the 1-hour as well. So, if we do get above that zone, that could be an opportunity for the next leg to the upside because it broke the market structure, broke the ascending triangle pattern, creating price action market structure bias to the upside, and that's basically what we're looking for a potential move to the upside. If we do get a weakening where we're not able to break above this zone, maybe we get some nice wicks above here, but overall we're below our 1550 level of resistance. We're going to be looking for a pretty quick move to the downside, retesting the 1450 level of resistance and support. Like we saw here, it was a resistance before and then turned into support with the squeeze right here and then a bullish move up. So this zone is a pretty key zone within the chart that we understand where buyers are potentially going to be located. So, it's a well-respected ascending support that we have. So it's just a matter of if we're gonna break above the zone or below the zone. If it does, it's kind of what we're looking for. We're looking for a lower low. We're looking to enter potentially on the lower high if possible. But overall, at the end of the day, we're going to see some consolidation in my opinion because that was a massive bearish push to the downside and the market needs to take a breath. So let's go to the 4-hour here. We've kind of discussed the daily, which is very important, and the weekly still has 3 days left until the candle closure, but we'll see where it closes. The 4-hour looks a little bit messy, but it's not too difficult to understand. You saw a descending trend line connecting the lower highs. You did see a double bottom here on the daily. It was a candle closure right at that zone, but we don't have the closure on the 4-hour yet. If we do get a closure on that 4-hour, this means that we could get a potential bounce here, and then now we're going to be consolidating around this zone because this was that resistance that we talked about, and then at that point we could then be looking to see a little bit of sideways action. If not, then push back up like we talked about. So we'll see where it goes. But on the 4-hour, there's not a whole lot to talk about. On the 1-hour, it's a little bit more clear of a picture where we broke the descending trend line. We got halted at the previous high here, so now we're stuck in a small range where we're testing this previous level of resistance as a new level of support, but also getting stopped by the previous resistance right here. So we're kind of in a small trading range. We did break above this descending trend line, so the momentum is a little bit more towards the upside. Volume was a major rejection at the top there, so there's a lot of supply around the 1550 range. Makes sense because we can see that was where we squeezed out of back in early of 2020 in January, and then now we are looking like we're testing that same zone as a resistance. So, we'll see how it goes. The main key chart that I'm going to be looking for is going to be the daily because I think it shows the story the most clear on the daily chart. So we'll just be looking for a nice consolidation here, and we'll see what it does. But on the daily, looking at the next few days, I think we will see some consolidation around this zone, seeing quite a bit of just choppiness. Not really looking to want to trade these tiny moves, but we'll see how the market goes right now. But overall, that is gold. I'm going to assume that there's going to be some level of consolidation. I'm not looking for massive moves to the upside. Now, what I would need to see for potential is to at least break the 1550 range fully, not with a little wick, but an actual break closing on the 1 hour and 4 hour above the zone, and then a nice pullback validating the previous resistance like we saw here into a new level of support that would then complete the, could look like a reverse head and shoulders, but more or less a double bottom, and then it's validating the completion of the break of the high of the double bottom, and then we're getting a pullback to then make that next extension to the upside. So there is a possibility for a long, but in the most part, looking at the 4 hour and daily, I think I'm going to be staying patient and trying to see through this consolidation until it gives me more of a confirmation, either to the upside or downside. So, and that said, we're now going to go on the silver chart here. Now, something to note, surprisingly, look at the hour chart on gold. We got a strong push to the upside this morning, but on silver, on the hour chart, there was a lot of confusion, a lot of noise. We did get a push to the upside, breaking the previous little minor level of support at around 1260, 1270, but we closed above it on the hour, but we got a lot of noise where there was a lot of volatility in that 1 hour time frame, as we can see, touching the low at around 1180. Gold didn't really see that volatility at all, and Bitcoin didn't either, so it's just something to note, and that kind of took me taking a step back and saying, okay, do I really want to be looking at BTC for a short right now? I was somewhat eyeing it up, but as a head and shoulders, and we'll talk about that within the BTC charts, but we didn't really take it. We were waiting a little bit more patient. So right now on silver, we're just consolidating right here. We see nice key zones where they're well respected, and we're basically right in the middle of our sideways consolidation, so we don't have the highest probabilities. If we were at the resistance, obviously we'd be looking a little bit more of a short. If we were long, if we were at the support, it'd be looking a little bit better for a long, but I think in this market, obviously we're in a major momentum to the downside. We don't really want to be looking for longs, but if the market structure does provide us with an opportunity where we are longing, mainly for gold, I think that's a better opportunity. But for silver, I don't think that longing, like, look at how strong this support is on silver on the daily chart. But all the way back from 2014, we see it was a support, very well respected support with a double bottom, another instant rejection, and then another area where we've held as a strong level of support. So that $14 level is a very, very strong level of resistance. Now, in that said, if it does break this confluence zone, because looking back, we can see all the way from the weekly that this descending trend line is a very, very well-respected zone. So what we're currently seeing is now a confluence zone that if the price does change momentum and break to the upside, we could be seeing a massive momentum shift here, because right now we have our anchor point right here. We have the first rejection, and then it's not perfect, but we're seeing very significant rejections all along that zone where sellers are just pushing the price, making lower high, lower high, lower high, lower high, lower high, and then at a certain point the buyers just said enough is enough. We've been holding this $14 support for such a long time, and we're getting a squeeze. This is the apex. The market has to make a decision, and the bulls took over. They took control. After this bullish candle, they made a strong push to the upside, hitting a very key level around $18, as we can see with the Morningstar candle closure right at that $18 level, and then kind of got a double top here, and then at a certain point when it broke that support, it was just a straight plummet down. A lot of people are saying, wow, well, Bitcoin dropped so much further than gold. How can you say that Bitcoin is a safe haven asset? Silver has been around for thousands of years as a safe haven asset, and look at the plunge that it took. It's a part of it. There's going to be massive panic when there is just these crazy crisis events that occur, and people are going to be liquidating because they have margin calls and all that stuff, so they need to get into cash, they need to liquidate, and that's what we're seeing right now. And I think that we will see an inevitable push back towards the upside, and once that occurs, there will be a momentum shift. Hopefully, well, not hopefully, but I think in terms of global macro, we will see some worries of inflation if we do get a lot of QE and a lot of money printing, which we're already seeing, obviously, with not just America, but with the ECB, with Japan, with Australia, with China. All these major countries are seeing mass amounts of increase in the monetary supply and increase in balance sheets, and I think it'll only go higher as time goes on. So just going back to silver, we're seeing a massive deflationary event right now, so we got a massive move to the downside. We're going to get some level of a pullback. I don't know exactly how aggressive it will be, but just looking on silver, where do you think the highest probability situation to enter on a short would be right near this level of confluence, right? Because we've seen this zone get tested and respected so many times, all along this descending zone, getting pushed down and down and down all throughout the zone. And then now we broke this horizontal zone, really strong level. Now if it pulls back here, where do you think the highest probability situation is going to be? It's going to be a short right around here, right? So that's going to be the situation we're going to be looking for in the overall market. Now, I'm not currently trading silver, but it's, I think, great to be looking at where the other commodities are looking at, because I think at this point, what I'm going to be looking at is be looking for the similarities of the cryptocurrency market, mainly Bitcoin, which is going to be the driver of the crypto market, and the relationship that it has with silver and gold in the precious metals sector, because I think there's going to be a lot of relationship there as time goes on because of the fixed supply, because of the relationship of the kind of potential for it to be in the new monetary system that we could be building, with our current one kind of getting shattered right now. Fiat currencies, I do think, will see an inevitable end. That's a very bold statement, but you know, what can they do? Mass lockdowns. Like, what can people do? What can the government do? You need to print money and give it to people. How else can they do it? They don't really have any other options here. So basically, that is the chart for silver. We're not going to get too much more into it. On the daily chart, we've already talked about the smaller time frames. You know, if we do get a pullback, that's completely normal. We do have to understand that $14 range is going to be a key level of resistance if we do get a pullback. Just something to note. Now going on to the US oil. Let's just stick on the 4-hour chart here. US oil is the next one. We've been kind of within a trading range here around $35 to $30. We broke below the zone. As we can see, there's a previous level of resistance just above the $30 range. Respected multiple times. We see it respected here, and then respected one more time before it dropped down, pulled back. We got a no demand on this candle right here, and then a bearish engulfing candle next. That's a pretty bearish structure in my opinion, in terms of what we can see like so. Oops. I think I'm going to close this and just keep this. So just in my opinion, that looks pretty bearish. We do have an unconfirmed descending trend line where we have a anchor point, and then we have a type A and then a type B. I classify that as still one rejection, but it's well respected through there. So we have a couple anchor points that we can use, although theoretically it could go all the way up here, but I can't imagine it going anywhere here. So this is the closest it's going to get to this area. So we see a consolidation below this zone. We did see a no demand when the price was near the resistance, testing the area, testing the demand, testing the buyers. The buyers proved to be not very strong, although we are getting some interactions and some transactions to be taking place at the low here. So that could mean that we're going to get another bounce up to this zone, and then if we get another bearish injection of sell pressure, that obviously would mean that that's a double confirmation of sellers within the area, as well as if we get another no demand. That's just a really high confirmation probability that the price is seeing an increase in supply and a decrease in demand, which would obviously mean that we could see another drop down here. And looking back at the daily and weekly, where is our next area of confluence for a support? Going to be around the $22 range. And why is that? Let's zoom all the way back out. We have a descending level of support connecting the lower lows. As we can see, anchor point, first major interaction, second major interaction, and it's going to be potentially fourth major interaction. including the anchor point. I guess this is the third, not including the anchor point. And then let's just look for confluence, because we're going to be looking for confluence in any real level of significance, because that validates it even more. And that's going to be around the $22 range. Let's look back all the way from the 2000s, late 90s. The major thing that kind of tipped me off is this very, very well-respected zone. We see rejection, 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 rejection all through here. And then it was a resistance support right here. We could potentially extend it into a zone like so, because we do see that this was a level of resistance that turned into support. We see resistance, 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 turning into a nice support all along here. So it could be a zone. Like we always say, it's not going to be an exact area within a chart. It's going to be a zone. So in that said, candle closures could be here, like so, and the wick could be here. But overall, I think the next leg could come. Overall on the long-term chart, we are making lower highs and lower lows, so I wouldn't be too surprised. Now, in that said, just looking at the weekly, we can see oil can just plummet for many weeks without much stopping it, really. We do have a double bottom pullback with an exhaustion move, and then coming back down, make a lower low, so the market structure is still making lower lows and lower highs. Nice little lower high, previous support, new level of resistance, and then another move to the downside. So I wouldn't be surprised if we'd get something like that. But on the daily chart, that's kind of all we can draw for potential market structures, in my opinion, on the 4 hours. Just our simple trend lines that we have on the 4 hour. Key area of resistance around $30 right now, which if we resist again, has a high probability of continuing to the downside with a descending trend line right there, holding our bearish move to the downside. So that's basically the analysis for US oil. We'll see where it goes. If it breaks this descending zone, if it's able to confirm it a couple more times and then we break, that could be a potential move to at least test our $30, low $30 ranges, if it does come back down here and start moving towards the upside. But if it continues to hold, obviously, it's looking pretty bearish. A little bit of coffee here. All right, so we did gold, silver, and US oil. So the commodities are done. Quickly going to look at the gold and silver ratio. We're not going to look at this every single time because obviously we're looking at the weekly, so it doesn't matter too much. But we did put in our nice levels here. Let's just refine that a little bit. So let's get our snip and then discuss the overall structure of the weekly, because this is a very large time frame, and we'll kind of quickly talk about what happened in 2008-9, somewhere around there. So this is that last kind of economic crisis that happened, the financial crisis. So we're interested in here to here, when it was basically a straight line from here to here, because what this is telling us is there is a huge shift where silver is increasing much faster than gold. So silver is doing this while gold is doing this. And in this time, gold is moving up, because initially gold went down a lot right when the 2008 financial crisis started, because there was a deflationary period where gold was going down during the worst of the stock market. And then once investors, I guess, found out that, holy shit, this is really bad, there could be inflation because they're starting to implement quantitative easing. There's a shift in when there's economic turmoil, there's a shift in the investor's psychology, kind of as a mass hive mind into a safe haven asset after some serious amount of pain has been taken. And that's what we're waiting for, basically, is we have to expect that there's going to be a pullback. There's going to be a pullback in gold, silver, Bitcoin, and that's what we're seeing right now. But at the end of the day, we are going to hopefully see some price appreciation. Don't exactly know what we were talking about here. But let's just go back to here. We're saying gold is this, silver is this, and then Bitcoin will kind of be like this, in my personal opinion, if they're going to be correlated. So what we're going to be looking for is, right now, gold is doing much better than silver. Gold is holding its value much more than silver right now. we're going to be looking for a point in time where silver is going to be doing much better than gold. When that's the case, there's more speculation. It's kind of like if gold is going to be Bitcoin and silver is going to be your alts, where if the market's not doing great, more people are going to be diving into BTC because BTC is a more quote unquote, I guess, stable. It's been longer lasting. It has the most historic price action. It's the first. It has the highest dominance. It's the king of the market, obviously. So people are going to be going into that if the market is not looking too great. But if it is very bullish, if there's high speculation, if the market is in kind of full blown hype mode or FOMO mode, there's going to be more speculation, and that's kind of what we're seeing, kind of like here. And that's what we're going to see somewhere like here. So this is going to be a macro trend kind of indicator of when the shift into the precious metals and safe haven assets are going to be coming in. So right now, we're above our ascending channel zone. You know, we're probably going to get some pullback here. This is going to be the first confirmation when we break back into the channel. And then the second confirmation is when we break out. And the final is when we break that 82 level, where 82 ounces of silver equals 1 ounce of gold. And then we can see it's gone all the way down to the 30s, where it takes only 30 ounces of gold, or 30 ounces of silver to purchase 1 ounce of gold. And right now it's 122. So I think it's the highest it's ever been in terms of the historic comparison of silver to gold. So that means that silver, in terms of historic valuations, is extremely undervalued compared to gold. Basically, that's all this chart is showing, and we're going to stick with that. The next chart we're going to be looking at is the S&P 500. I think it makes sense to look at the weekly chart here, and then go on to the hour and 4 hour chart that we see. Looking at the weekly, major level of support at around 24.38. We see that it was the bounce back in December of 2018 in basically Black December, and then from January in 2019 it was basically a massive move towards the upside. But we bounced here before. Also, on that same note, on that same weekly time frame, we can see there's a key level of potential resistance at around 2600 because there's a strong level of support back in 2018 as well as 2019 as basically to kind of bounce before making a strong move to the upside. So we got a couple zones here that we're working with. We got a nice level of support sitting around 2400, and then we have a strong level of resistance at around 2600. Looking at the weekly chart, and I think that we could be playing around this zone for a little while. You know, for the people who think, oh, we're going to bounce and climb back up, you know, that's a significant move. Don't think that that's just, you know, a small pullback. You know, looking at 08, we didn't see that type of aggressive move until we were in the almost worst part of 2008 here. And looking at the dot-com boom, you know, you wouldn't even see that aggressive move happen in the dot-com move. It was at least some normal, somewhat lower lows and lower highs here. 08 definitely had an aggressive push to the downside for a couple weeks, but, you know, look at what happened here. We haven't seen this type of price action where we're getting these massive gaps to the downside, breaking records left, right, and center for decades and decades. So, you know, like this is probably somewhat similar to what we're seeing, where we're seeing 33% correction. And yeah, we dug out of that grave and came right back up. But I don't personally think so. I personally think that we'll get a correction. We'll get some correction to the upside because we're in a bearish market now. We're going to correction to the upside, a pull back, validating some level of resistance, and then probably come back down. So I'm going to look up one sec here because, you know, we have seen something similar here. I don't think I'm able to find it this quickly, but we'll look at it later. We'll talk about it within the Discord in another video. But basically, a potential move would be a pullback validating maybe this level of resistance, which is going to be a previous level of support. We also see it's a bit of a zone, but we can see this area around 2900 is a pretty key level as well. We see it was a previous level of resistance, turning into support, and there was a key level of support here where there was candle closures and wicks right at that level before we dumped back down. So, could be moving all the way back here, and we do have a couple mid-range zones, but I think the main resistances are going to be either 26 or 28, 29-ish. So that's on the lookout for the long-term weekly. Now going on to the hourly, we do see that we've been holding this nice level of support. We did get a little bit of a bump up this morning. Let's get our snip here. So a little bit of a bump up this morning. We've been holding this $2,400 support for quite a while here. We see 1, 2, 3, 4 validations of this for a support, so we know that that's a dependable zone. So we can classify that as, yes, there are going to be buyers within that area, and if it does pass, we know that there's going to be stop losses set around here from the buyers trying to buy that dip around these zones here. So probably, yep, there's going to be buyers here. If it goes below it, we're probably going to get a pretty aggressive move because there's going to be long bias people getting out of the market, because like we've seen here, if it breaks below the support, we're probably going to get a move back down. So considering that, that's basically going to be the outcome if it moves back down. Now, if it does hold this level of support, we've been talking about it basically every day, but if it does hold this support, we're going to be looking for a potential higher high, higher low situation, previous resistance, new level of support. We'll still be in the consolidation, but we'll then know that the bearish trend has been halted momentarily. And if we do get a market structure and then we start seeing a potential higher high and a higher low, well, then that could mean that we're going to start climbing back up to maybe this zone or this zone. So that could be a little bit more bullish for the overall market. We'll see how BTC reacts to the SPX and then gold. We didn't really do these market analysis with all these different assets, but with so many things moving and a ton of shit happening at once, it just makes sense to be looking at the overall market. So that's basically analysis for S&P. We're kind of in that range, in that squeeze, so there's not a whole lot to do other than to patiently wait to see what the outcome is of this squeeze. And then we already talked about the larger time frames. If we do break back up, we know that this 28-ish $100 level, 29-ish $100 level we talked about, which is in confluence with this zone right here. So if we do get a break, we could see a move to the upside here, which when from the support would look like it's a massive 20% gain. Everyone's going to be on the hype train thinking that there's going to be a massive rebound, taking out the fake out here. So I don't want to sound perma-bearish, but, I'm not really looking to enter the equities market as of yet. So that's basically analysis for the hour chart and the weekly chart on the S&P. Final look is a quick look at the US dollar index. I'm not going to do a whole lot of TA, and I'm going to stick on the daily and weekly for this, but I'm just mainly looking at this because I want to know how strong the US dollar is. Obviously, a weakening dollar would be very strong and bullish for gold and silver, which would probably mean it's bullish for Bitcoin. So it's good to understand the many different assets that are at play. Obviously, you can't look at everything, but right now, the US dollar is pretty strong. It's stronger than probably a lot of the different currencies that we see within the markets. Japanese yen's actually not doing so bad. We'll actually take a quick look at the currency strength just on the short term here as a overall look of the market. We see on the weekly here, USD taking the lead. Very, very strong compared to the rest of the currencies. Like I said, Japanese yen actually holding up pretty well. Compared to GBP, AUD, New Zealand, those are going to be the weaker pairs, the weaker currencies within the market right now. So the US dollar's holding fairly well because a lot of people are worried. Stocks are obviously going down, crypto's going down, everything's really going down, so everyone's driving and trying to get into the dollar and store their wealth in the meantime. And I do feel that once there is a bit more of a quantitative easing push, a little bit more of a push to use the printing press to try to stimulate the economy, we will see the dollar start to come back down here, in my opinion. And that's we'll hopefully see the correlation when gold and silver will be going up, and we'll hopefully catch early on that trend for BTC in the major shift that we're looking for. A lot of shit happening, a lot of stuff to go over, but it's very, very interesting to see all these different assets kind of come together and form a story of the global macro shift that is happening. So super, super interesting time. Not getting a lot of sleep, but this is kind of a once-in-a-lifetime opportunity, and, you know, I can sleep after, basically. So that's the kind of global macro bottom right-hand chart. We're now going to be looking at Bitcoin and then also the different alts within the market. I'm going to take a quick drink of coffee, and then we'll be going over the different markets here. All right, so let's look back at the larger time frames. Going to go to the weekly because we did get a little bit more buy pressure here. Looking like we are now green on the weekly candle here on Coinbase. What would be pretty strong would be a candle closure if we closed above the 200-day moving average. Like I said before, I'm not a huge advocate for moving averages, but on larger time frames, because the 250-day are pretty important areas in terms of just the amount of people who look at them. I just thought I'd plot it, but the main zone of support I'm looking at for a potential level where there's going to be demand is going to be a confluence zone, where we have the descending zone of support initially shown right here. With an anchor point, we see 1, 2, 3, so 4 touches in total, making it a valid zone, and then we see another rejection, making it a fifth. It's creating it a valid zone. And then also in confluence with the horizontal zone here, we see that it was a support for multiple weeks before it made a move to the upside. So it's a pretty key zone, and you know, we'll see how it reacts here. We'll talk about a potential level of support on the CME futures, which is a little bit more crisp and clear compared to this. The weekly gives a little bit more broad level of support. It's not giving a clear, crisp, exact area, whereas the CME futures, I think, gives a little bit better of an area where we can have a valid level of support. Before we jump into the daily here, just something to note on the sell pressure. We had more sell pressure come in than we had basically in the bull run. Like, that's insanity, right? So, in my opinion, I think the dust is going to settle. We're seeing a lot of consolidations right now. Just chop, chop, chop. So, you know, it's not favorable unless you're like a quick short-term scalper to be trading in this market. I think it makes sense to look at the larger time frame, take a step back, and try to assess the story of the market right now. We got a massive move from basically every asset class here. So the market needs to take a breath, and you know, we'll see where it goes. But right now we're just going sideways. And that said, let's now go to the daily for the CME futures, which is going to give us a little bit more clear view of where we're seeing the support be held right now. And let's get our snip and just draw on the current chart that we have here. So we got our previous descending zone, which created our channel, which we broke out, and that was our entry right here to the upside with the reverse head and shoulders there. So that was our key descending zone. I didn't really extend it until the price kind of came towards here, and then I was like, okay, it could be a level of support. You know, during the dump, you don't exactly know where. In my opinion, it's never a good idea just to set an order at a certain price point and say, I really hope this support's going to hold. That for me is not enough confirmation. Everyone's different, but that's just me. So we waited to see if the price was going to hold a certain level, and that is where we held right here. So we got a descending zone, which was a previous resistance, and then we also drew this on the weekly, is it's our support. It's also a descending zone, and we see it's a well-respected zone. So we got Double confirmation with the two descending zones, and we also have that same horizontal zone test as a nice level of support back in March and April, in I guess not really May so much, but of 2019. So we know that yes, this is a very, very key level, where potential buyers are going to be located. So, good to see. Doesn't mean that we're instantly going to long, but it just proves that there's going to be some reaction to this zone, and that's exactly what we're seeing. So we're seeing how the price reacts, seeing some level of equilibrium from the buyers and sellers after that massive shift in supply and demand, where there was an influx of supply and a shortage of people wanting to buy, almost no one wanting to buy. Hence that massive move to the downside, and now we're just consolidating at this confluence zone of support. We're not seeing a tremendous amount of buy pressure. We only got around 4 hours left on this daily candle, and we're not seeing a lot of buyers enter the market. And that said, we did get a reduction in sellers as the price came in, which is somewhat good, but overall, obviously, we're still in volume distribution in terms of just the historic volume. We're in a bear market. We're in a bear market, and we got to treat it as such. Now going on to a different daily chart. This is going to be Gemini. So similar type of trade structure, except for instead of making it into a point like we saw in the CME, this is actually creating a channel, a descending channel. And we see a level of confluence here as well. But the previous resistance here is going to be at a different location on this exchange. And what this is showing us is a potential level of confluence where there could be a level of support right around here that could be acting as a level of resistance. We don't exactly know. We'll see how the price reacts to certain levels, but we do have a couple key zones here where we could be holding levels of support. So we got a descending zone of resistance, and we also see within the consolidation that the 6K zone that is our previous market structure right here in 2018 is now going to be our resistance area. Where was that? Right here. That's going to be the resistance area that we're currently holding. So we're just basically in a range where we've identified a strong level of support at around the $4,800 level, maybe $4,900 level, but we also do have a resistance at around 6K. So we're in a consolidation right here, and you'll definitely be able to see that consolidation on the 1 hour chart. Basically just going sideways. I did draw a few trend lines here. This green one is going to be the large time frame one, and then the red one that we're currently seeing right here is just the kind of trend line I drew within the consolidation. I did take a couple trades, one to try to capitalize on this move to the downside. Did not happen. We got stuffed, and then it came right back up, and I was hoping for an extension back down to this zone here. That would have been a good short, but it didn't happen. We got rejected, so we took an L, and that's okay. And after that point, I just said, okay, we're just going sideways, bouncing just from kind of support to resistance. I don't exactly know what's going to happen because we're just going sideways. There's no real nice respected zone. This massive wick to the upside kind of screwed the smaller time frame hour charts because the hour chart closed right up there, so that's going to distort a lot of the smaller time frame trades that we're going to be looking for. On the 4 hour, it doesn't look bad because you see a descending zone with a support, resistance, and a resistance. So we could say that it's a level of confluence here where we have a resistance from the descending zone and the horizontal zone. And if we break here and hold here, we could be seeing a nice level of a support hold where we're going to get an entrance at this zone and a potential take profit at this zone. If it breaks above, that's tremendous, but that's kind of the range that we're going to be looking for, which isn't a huge range. And in my opinion, because we're in such a consolidation, I'm just going to be patient. It's not for me a probability that I'm willing to take because we've already seen rejection at these zones prior, and we see such a limited amount of volume. I'm not really looking for anything right now. I'm gonna stay patient, probably even take out this descending zone and just try to be patient for the larger time frame swing that we're probably going to be having. So, not a whole lot more to talk about on the 4 hour here. I'm not trying to break it down and find a trade. I'm going to try to wait for a trade to come to me. Because in situations where you don't really see a trade, you're going to try to make one up in a way where you're going to see potential opportunities, but they're not going to be very legitimate, and you want to really ensure that you're finding only the highest probability situations. And that's basically the goal of a trader, is just you're only good as your last trade, so you better make every single trade count, basically, is the goal. So on the 1 hour, see, we did draw a couple of squeezes, but I'm not loving them. There's a lot of kind of noisy, messy trend lines that you could draw. Like this is that initial trend line that we drew. It got stuffed. We were trying to get to at least this zone, maybe even further. Could not make it, and then we were unable to capture, and it came right back up and took us out. But that's okay. That was our squeeze, and it was kind of like so, maybe a little bit like there, but overall that was a squeeze that we were looking for. It didn't come to fruition, and that's just how it goes sometimes. And this is that hour candle that closed basically right at the top of the resistance there, and I just drew this ascending trend line in, but at the end of the day, I'm not really using that as a valid zone yet. There's only been 2 times where the price has respected that area. Not really a valid zone. You know, if we get a price to bounce here a couple of times, then it makes it a potentially valid zone, so we can use it, and if it breaks that zone, we can short the market, which we'll definitely be looking to do. If it does create an ascending triangle here, and if it breaks to the downside, we're definitely going to be looking to short the market again. So on the hour, you know, we're just in a trading range right now. Very unconfirmed ascending trend line, but the main thing we're looking at is this support here, this resistance here, and just a continuation of the sideways movement. I did draw this unconfirmed anchor point first touch, so if we're going to get maybe a couple more touches here of this ascending zone, then I can use it as a potential area where we have an ascending triangle, like so, and then I'm going to be looking for that break, pullback of the lower high formation, and then I'm going to be looking to enter, you know, before we make a move to the downside, but I'm going to be wanting to enter at the completion of the break of the price action with market structure, and I'm going to be looking for volume as well, like always. The 3 criteria that we're going to be looking for. So we'll see how it goes. I don't want to be too interested right now because, you know, it could just literally go like this. I don't know, and I don't want to trade anything like this. I want to trade the major market structure moves, and right now we're just kind of going back and forth right now, and I don't really want to be taking part of that noise. I want to be waiting for the larger market moves, which would then require me to go and take a step back into larger time frames and just be patient. And it's not easy to be patient all the time, especially when there's a lot of things happening. But it's basically what you got to do. All right, so that's my analysis for BTC. Not going to dive too much more into it here, and we're going to see what today brings here. Already talked about commodities, talked about BTC. That's the majority of the market analysis. Do see gold holding there a little bit, which is nice to see. Silver is, let's see if it's kind of calming down a little bit after that volatile time. So it's not so bad. Now is going to be the different alts within the market. We got Ethereum, XRP, and Link. Very similar. I'm not really wanting to enter here. We did get another squeeze like we saw with Ethereum. Similar price action to Bitcoin, where we got a low here of a mid-range zone, and we got a resistance at around $136. But other than that, we're just in our basic trading range. And after that massive move to the downside, you know, we do have to have some sort of market breath taken, and that's exactly what we're seeing. So very similar price action, not much more to talk about. Hopefully, if it is able to create a nice structure for us for a potential ascending triangle, then we'll be able to short the market again, maybe if it gets up to 116, 120, and then if it drops, obviously that would be pretty favorable for us. So we're not in any... we don't need to take any trades right away. We're going to be very patient. There's going to be a lot of volatility to come here. So, you know, there's no need to try to jump into a trade as soon as possible. There's a lot of stuff happening, and we're going to try to take it day by day. Look at the daily, the 4-hour, and the hour chart, looking at the larger time frames, trying to identify where their market shifts are going to be located. So right now, We're in a consolidation, so we're kind of just settling after the dust, and we're emerging into a new market structure and a new price action pattern that we're going to be looking for a potential entry in. So that's basically the trade. XRP, something similar. We see that the price is yet again holding a descending zone. This one's pretty well respected, as we can see. We see wick touch here for an anchor point, and we see 1, 2, 3. So it's a pretty well respected zone of a descending resistance. And if we zoom right in, we could probably draw a nice ascending zone kind of within the price action pattern, kind of like so. Not perfect, but like if we do capture that candlestick closure right there, that could be an opportunity. If we were being a little bit more safe, we could put it up here. Just, you know, taking the time to kind of assess the different opportunities that the market could provide us in terms of the squeeze. But overall, XRP looks like a potential opportunity because mainly of the 4-hour chart. That's the main kind of thing I'm going off of. And then what is this green descending line? Let's look at the weekly. We can see well-respected lower lows of a descending zone. So we see right here. I think a daily is able to provide a little bit better of a view with some better candle closures. We see a type C, which is an ideal, but we see a type A. I think we could actually maybe go like this, maybe not. I kind of like that area right there. So I think I'm just going to leave it where I had it. I was pretty happy with that zone. Let's see if we're able to do this. I think that might be the better option for me because of the candle closure right here and the type A and the type A here. Just gives me a little bit more of a valid zone, just a little bit more, and I like that. And it's still giving me the same potential level of support here, but overall it's providing me 1, 2, 3 areas of support. I'm pretty happy with it. So we're squeezing here from the descending support that we talked about, and as well as the descending resistance that we currently see right now within the market. This 4-hour candle here, wick, is on the 1 hour a candle closure, so that's making it a little bit less desirable. So, you know, for shorts, it's not looking ideal because of that support zone. We could have it extend beyond, so obviously we don't know how far that is, but in terms of dependability and reliability for a take profit, we're looking at just these lows here, and it does look like a potential. Because if we do break down below this zone, we could see a potential risk reward of maybe 2.5 or 3.5 if we're able to make that extension. Maybe not 3.5, maybe 2.5 at best here, because we do want to give that price room to breathe. But you know, I don't want to be extending beyond this zone, but we are at a near resistance of a well-respected descending zone on the 4-hour, so it is something to note. But I think the move is just going to be from here to here. It doesn't seem like much, but it's an 8, 9, 10% move potentially, which is obviously significant if you're only risking 2, 3%. Those are some good risk reward parameters that you'll be looking for. So, you know, we're looking for that. Well, like I said, we're going to be very patient because on the larger time frame, this structure makes a lot of sense. Especially if you look and zoom out a little bit, that structure makes a lot of sense. So if it does break down below here, you know, it could look like a really good long opportunity if we get the right things to come in, because right now what we're expecting is a potential move from our current level of support back down to the resistance that we've held 1, 2, and if we're able to hold for a third time, pretty high dependable trade in my opinion that we could see. So you know, don't want to go beyond here, but that's looking like a pretty good triangle, and then we're looking for a potential break if it does go above that because of this zone here. We saw squeezes in the past of this zone. We saw support here, and then we saw some higher lows, so we held this zone, and then we saw volume accumulation, where this is a volume accumulation period where buyers are entering the market, institutional money is entering the market. We get our first market phase, and then we get a retest validating the previous resistance as a new level of support, squeezing really, really nice price action, market structure, VSA overall analysis during this period, and then you saw the market structure then move the price up. So that's what we're looking for. That's exactly what we're looking for. We're looking for the price action, VSA, and market structure to come together perfectly, kind of like here. So we'll start early in the consolidation, kind of like here, but we could see a potential opportunity for a short, in my personal opinion. But it's not going to be a very long one. It's going to be a little bit of a day trade scalp. It's not going to be a long extension to the downside unless a lot of different assets start to plummet. Then we'll see the price flow and drop below this 12-cent area. But in my personal opinion, we do see a squeeze here, and we're just going to play the squeeze on the 15-minute here. Not seeing a whole lot. We did see a reverse, or we did see a head and shoulders on BTC, and I think XRP actually shows it very well here as well. So we're just going to talk about the 15-minute chart, and we were looking at somewhat of a potential entry on this reverse head and shoulders because, or sorry, it's not a reverse, it's a normal head and shoulders on BTC. Very, very similar structure. We saw it right here. So this is a come up, and then we saw the left shoulder right here. This is the head. And then we saw the right shoulder here. Right shoulder, a very, very poor RS, but you get where the price action pattern is. And then you got a pullback. And I think everyone at that point is going to be like, holy shit, this looks like a prime opportunity, especially before this little move up. If this wasn't here, like so, that looks like a pretty good opportunity. We see decreasing sell volume. In my opinion, that's not bad, right? But at the end of the day, why did we not enter? We were looking at SPX, we were looking at gold, we were looking at silver, we were looking at the other assets within the market, and they were going up. So this moved above the previous support, like so, and it went above the previous support. So that is now an invalid head and shoulders because that was the potential opportunity right here. If it held this support, it did not. It broke above it, and it broke even higher than the right shoulder there. So, it would have been a good setup because it's basically right at our resistance. So in terms of market structure, it's at a resistance, so we're looking for shorts. That's great to see. We broke market structure support. Great to see. Market structure is also in line. Looking at VSA, sell pressure is more than buy pressure, and there's reduction in buy pressure on the way up, hopefully before the next leg down. And if there was a no demand candle and then a bearish engulfing candle after, that for me is a pretty precise entry. But we didn't really get that, so we didn't enter. Simple as that. We have a set of criteria, and if we don't see it, we don't enter. But, the short isn't up, in my opinion. The short is still in play. Looking at where we are, in my personal opinion, BTC doesn't look like a great potential short play, but XRP looks a little bit better, but, we'll see where it goes. I don't want to really try to trade these small moves. I'd rather look for the larger move, but looking at the larger time frames, this does look like a potential opportunity here. We'll let the Performante Premium members know if I do enter, but this is what I'd be somewhat looking for, something like this. So a risk reward of 2 at a minimum, and then if we go beyond that, that's great for a little bit of an extension. But looking at risk rewards, the kind of minimum that this is going to offer that I'd be willing to accept is kind of a 2 to 2.1, depending on where my entry is and where my risk is, obviously. But 2.2 risk reward is something that I could see happening just with a push to the downside here. So not really seeing it yet, so I'm not going to enter. I think I will draw another trend line on the hour chart, maybe, just to potentially create a bit of a squeeze here. I'll look on the 15-minute as well. It's not really that precise, but we'll, I think, work with that because we see previous resistance, support. Yeah, I like that area, so I'll use that as my zone that's squeezing. So we got a nice squeeze here. Apex is right here, and we'll see what the market does. If it does break to the downside, could be a potential opportunity, but we will always want to be patient and really make sure that we have the high probability situation on our hands. So we'll let the Performante members know if we do enter, and we'll set targets and stop losses and all that stuff. But basically, major target is going to be here. We could potentially look for some targets a little bit beyond, but the majority of the trade, I think, will be want to be closing at this descending level of support at around 12 cents or 12.7, 12.8, something like that would have been the majority. And then at that point, if it does kind of push and consolidate further, we move the stop loss to break even a little bit before, capturing profits no matter what. And if it does push further and we have some short side exposure without any risk, obviously it's a good situation for us to be in. But that's overall the analysis for XRP. Don't think we did Ethereum. Yeah, we didn't do Ethereum. I think we started with XRP. So now we can go to Ethereum. These are taking a little bit longer with the new economic stuff that we're going to be going over, but I think it's very, very important. First thing, very simple, clean everything off the chart. We basically hit the low that we hit in end of 2018 when we had that total capitulation when BTC hit 3,200. Ethereum is at that zone. Basically, it's like BTC hitting a $3,200 level of support. That's where Ethereum is. So we're at the lowest point in years and years and years, right? So it's a significant drop that we've had. Gotta get a little bit of water here. Now, that said, if we are able to hold this level of support here, could be a phenomenal buying opportunity, but we have to be very careful because if it drops below this, it'll be a fucking brick chucking it out the window, in my personal opinion, because everyone for years is now under, especially in a time when people are seeking less risk, more stable assets like Tether or even just going into actual like cash or USD or something, but you know, if it goes below this zone, almost everyone is under, and only the true holders are going to be looking to actually hold, and everyone else who are speculators who don't really believe in the project will just say, fuck it, this is not going to go anywhere, I want to get out while I can and just keep all in cash. And I think that's where it's going to go. But right now, you know, we're not seeing a huge movement in price. Basically exactly the same thing as BTC right now. We're holding kind of our two zones here, and there's not a whole lot more to talk about in the larger time frames. We do have a couple zones that we're looking at for potential resistances. We just put in this one right now because we see that it was a candle closure a couple times where a candle closed and then the wick closed at that same level, so that gives us a validity at around $130 that zone is a key area right around there. We do have another area just below it that this rectangular zone is holding, and then we also have some higher areas. But right now, what we're seeing in the market right now is just a consolidation from 130 right here to our main level of support, which is around 90, I believe, 80, 87, the support, and around 138, 140 for the resistance, basically. And then looking on the 4-hour chart, kind of similar to BTC, where we're just consolidating, drew one small ascending trend line that is very unconfirmed because we only have 2 touches. If we're able to get 3 or 4 touches, that obviously validates it a little bit more. We did get a squeeze on Ethereum as well, or we're still getting one, it kind of looks like, but if we move to the upside, that could be an opportunity, but I think at the end of the day, I'm not really looking to capture a small move of a long to the upside with so much move to the downside already taken place. Very counter-trend trading, very contrarian. At this point in time, it just makes sense for me to try to look for that higher probability, kind of following the trend to the downside here. So I'm going to stick with potentially XRP looking like a better opportunity for a short, but Ethereum is a still potential play if we do get something similar on the larger time frames where we get that ascending triangle pattern. Link, I'm not going to spend too much time on because I want to see it stabilize, like I said before, after that massive plunge basically going to $0. I'd like to see, you know, days and days of that not happening again before I look to enter. That's basically it. Going to stick with the XRP chart right here. And now going to go on to EOS and BNB, and that's basically going to be the financial market update. Final couple pairs, EOS, very similar structure on the 4-hour. We do see that It's now broken the descending zone, so there's a higher probability of moving to the upside. Also, just looking at the volume, we see that obviously there's a lot more buy volume than sell volume within the price action. That sell candle right here, the doji right at that top there, is actually a no supply, meaning that there's a lack of supply on the pullback, which is pretty bullish. And then the next candle had a long wick to the downside, closing green with strong buy volume. So on the short term, EOS is looking a little bit more bullish. You know, simple stuff. We could just put a stop loss below the wick there, and then the take profit could be at the highs here. 2.55 risk reward, and then just looking at the smaller time frames, let's just see how that looks. I'm personally not going to take it because I'd just rather wait until we have a better opportunity when BTC and kind of the overall market is a little bit more trending, but you know, could see a little bit uptick, but at the end of the day, I am like I said, going to patiently wait. And we could draw an ascending triangle here too, or ascending trend line, but at this very moment, I am not going to be doing that. Going to stick with the 4 hour, just looking at the macro view of EOS. BNB is the final alt that we're going to be looking at. Let's look at the 4 hour time frame. We do see that descending trend line yet again, like most alts. We saw a break. This was not a no supply because the previous candle had less volume, but it does look like we are gaining more buy volume with the 4 hour chart here, seeing the wick to the downside, bringing it right back up. That's pretty bullish here on our zone of confluence, which is good to see, but it's a little bit messy, in my opinion. I don't love it. And then this is that descending trend line that the price is currently connecting to here on the lower lows. So we do see that it is at the lower low area. So we could see some more buy pressure coming into the market. Wouldn't surprise me one bit. I'm going to move this just a little bit so we got like so. But at the end of the day, let's just move a little bit more. At the end of the day, we do see something sort of similar to XRP, where we're seeing a descending zone and a squeeze in price. It's not as respected, and obviously I'm not really going to call it like a move to the upside or a break because we have this zone here. But we'll see how it goes. I'm going to just spectate on BNB and EOS for the most part and seeing what they do. XRP looks like a little bit better of an opportunity, and if we make a move to the upside for the bulls, I'll still be looking at that $5,800 zone for a level of resistance. So that's the crypto market. That's more than the crypto market update. We went over many different asset classes as well. Hope you enjoy it. I will timestamp it, and we are recording it now and then posting it instead of doing it live. Well, we do have it live on TikTok and YouTube, but we are now incorporating actual videos, so we're going to edit it and make it look a lot more professional. So we have daily videos that are very, very, I guess not as more professional, but there's no lagging, there's no glitching, there's an intro. It just looks a lot more cleaner in my personal opinion. So that's the update for today. We do them basically every single day, so hopefully you stay updated. Hopefully you are managing risk. You are able to hopefully capture some volatility here. We've been doing pretty well for this month overall. Should have been more patient through this consolidation. Kind of upset that I didn't just assume that it was going to bounce, but you know, it could have came back down. We had no idea. Pretty happy with that entry, even though I feel like I shouldn't have entered looking back. But at this point in time, we're going to be very patient. We're going to stick with our plan. We're going to be looking at different asset classes, looking at the correlations, looking at the news, looking at how much money is being printed around the globe, and then seeing how that affects the precious metals and the safe haven assets. So thank you very much for watching, and until next time, have a good one.